want to wait just another minute, we've got about 104 attendees.
I say we start on time. Let's do it.
Right. Excellent.
Say when.
You're ready to go.
Great. Good morning. Welcome everyone to ConnectPay's webinar, Navigating Small Business Payroll During COVID-19. Thank you all for joining us. We're glad to have you here. Presenting today from ConnectPay will be myself, Drew Schildwachter, Chief Operating Officer, and Matt Venuto, Head of Sales. Matt has been active in the payroll and insurance industry for over a decade, and I have been a small business owner in varied industries and understand the challenges of owning a business. Before we begin, we'd like to remind you that this is an informative presentation only, with a focus on payroll aspects of these new laws. We do not claim to be lawyers and do not offer legal advice. In fact, ConnectPay's business model, as some of you may know, is what we like to call connected payroll. We focus on what we excel at processing and payroll tax compliance. We strive to connect you to or reinforce connections with your trusted advisors, such as CPAs, brokers, and attorneys that can give your business the personalized attention it needs. So we encourage you to take this information and discuss with your advisors to finalize the best course of action for your business. That said, there's a lot of new information out there in a short amount of time. If your advisor has any questions or would like clarification around payroll issues, please have them contact one of us. We're more than happy to help. And also don't forget that ConnectPay clients have free unlimited access to ConnectPay HR Resource Center until the end of August, which includes access to employment attorneys. So please use this as needed. I'll turn it over to Matt.
Good afternoon, everyone. Thank you for joining us. The objective today is to give you an overview and a better understanding of your options and actions that your small business can take. Many of you may already have received funds from the PPP loan, so we'll be looking at how to best track the use of those funds for maximum loan forgiveness. You also want to be sure you're using the correct earning codes to track sick leave and FMLA so that you can get the most out of your tax deposit deductions and refunds. In this webinar, we'll cover the new COVID-19 earning codes, their usage, the payroll or the Paycheck Protection Program loan, and maximizing forgiveness, the retention credit program, Form 7200, as well as the tax deferral election option. At the end, we'll have questions and answers from the audience, so please type your question in the Q&A box at the bottom of the screen, and at any time, we'll try to get to as many of them as we can. If you do ask a question, if you can please make sure that you provide what industry you're in, how many employees you have, how often you're paying your employees, and what the impact has been on your business. This will help us more accurately answer the questions. Let's begin. So, Paycheck Protection Program loan. Let's take a look at some of the facts of the loan first. So the loan was designed for small businesses with under 500 employees to maintain payroll, make mortgage, lease, or utility payments. Initially, $349 billion was issued and quickly exhausted within the first 2 weeks. As of April 23rd, the fund was replenished with an additional $320 billion. Some facts around loan calculation are that the loan is generated from a total of payroll costs, covered leave, group health and retirement benefits, and state and local taxes assessed. Employers tally those total costs over the last year and arrive at a monthly average, which is multiplied by 2.5 to arrive at the loan amount. For clients in the loan application process, we've created a specific report that consolidates this look-back period for you and your lender. During that process, simply ask your CSR, we'll provide that for you. Big question. What will be forgiven? So once this loan is secured, we must now look at how we can best distribute the funds for full forgiveness. There is a breakdown of loan use in the covenants, which directs employers to use 75% of the funds on payroll costs and 25% on mortgage, rent, utilities, and specified debt obligations. Within the payroll costs include health and retirement contributions, along with standard company paid leave. It's important to note that any employees using the FFCRA COVID-19 paid leave codes are excluded from the forgiveness calculation. In addition, PPP loan proceeds can only be used to the pro rata equivalent of a $100,000 annually compensated employee. Now, these loan covenants go a bit deeper. There is an 8-week forgivable period to use the funds starting the day they hit your bank account. Many businesses are changing their pay cycles to weekly and starting a new pay cycle the day the loan was distributed for cleaner tracking. There is also an employee retention component. A business must stay staffed at the same FTE, full-time equivalent employee count as when they applied for the loan. Otherwise, the loan forgiveness is reduced proportionately with the employee count reduction. Salaries of employees must remain at 75% of their previous wage amounts, and there is a timeline for which you're allowed to rehire or reinstate wages, which is June 30th. What documentation am I going to need for PPP loan forgiveness? So, of course, we recommend having clear documentation of all these items within the 8-week period. All my full-time equivalents before and after the forgiveness period. Payroll reports specific to the 8-week period. We will provide them, of course. My 941 quarterly report and state-specific insurance and unemployment filing reports covering the loan period. All my tally of health and retirement contributions made inside the 8 weeks and records of payments made for rent, eligible interest, and utilities inside 8 weeks. Lastly, we anticipate varied interpretation of forgiveness from lender to lender. This was evident in the loan process from the onset of PPP, so it's important to see exactly how your bank will compute the forgivable amounts and use their formula. Anything that's not deemed forgivable can be paid in line with the installment plan at a 1% rate, or can be returned in full to the lender at no cost to the business. A couple of notes on this loan. An eligible employer that receives a Paycheck Protection loan should not claim employee retention credits. Also, any PPP funds used for employees that are on FFCRA sick leave codes are not forgivable. That's a nice segue into the earning code. So the FFCRA has radically changed how we use sick leave and what conditions are for usage due to COVID-19. Our in-house development team has created new codes in our system to process these benefits in order to maximize your tax credits. These new sick leave codes are, first bucket is 2-week paid sick leave at the employer's regular rate of pay for individuals that are in federal or state quarantine, healthcare recommended isolation, or experiencing symptoms due to the virus. Benefit limit is at $511 per day. The second bucket is 2-week FMLA paid sick leave, and this comes at 2/3 the employee's regular rate of pay. This is designed for an employee that is caring for an individual that is in quarantine, a child that is out of school, daycare due to COVID-19 restrictions. The third bucket offers an additional 10 weeks of the FMLA, and it's paid expanded family and medical leave. Still at 2/3 of the rate of pay, And this comes with a 10-week limit, $200 a day with a $12,000 max. Keep in mind, there is a new labor law poster. This will be included in the email packet sent to all of you after this program. It'll explain these three codes in greater depth, and this is something that we recommend and is required to be posted in all of your workplaces. What are the benefits of using these codes, these COVID-19 codes? The main two is retaining staff. It allows an employer to maintain staff and reduce turnover and the challenges of then turning around and rehiring your staff. Secondly, it's a tax deduction. By utilizing the FFCRA earning codes, an employer can use all Social Security tax from the employer and the employee side to draw ongoing payroll from. Another available benefit to employees is the retention credit. Retention credit is generally designed to support businesses with less than 100 full-time employees that are closed, partially closed, or experiencing substantial revenue loss. The purpose is to drive employee retention through the organization. Qualifications for this loan is measured with a look-back period, indicating a 50% drop in revenue through a full quarter in comparison to that same quarter last year. Under these circumstances, a business can apply for credits on 50% of the first $10,000 in wages and health insurance paid to each employee. The dates that it's available from is March 12th through January 1st, 2021. This next slide is an example of what it would look like. Q2, my receipts are down by 50%. I'm looking at Q2 in 2020 versus Q2 in 2019. As we move into Q3 and business resumes, my receipts surpass the threshold of 80%, and my retention credit benefit that I can take would stop as of Q4. So that's how that is measured. Another note just to mention, if you are awarded a PPP loan, you may not utilize the retention credit program. There's no double dipping, it's either one or the other. Form 7200. So in the event an employer uses COVID-19 earning codes or the employee retention credit, and tax credits that are due exceed the tax liability they owe for the payroll that pay period, the IRS owes the employer the difference. So businesses have two options in which they can recapture these funds. There are 20 new lines on the 941 form which will account for this, but businesses must wait until the quarter closes to receive funds. The second faster option is the newly created 7200 form. This can be filed immediately. What we've done at Connect Pay is made this 7200 filing process available, as well as an authorization form for you to indicate how you'd like to handle capturing or recapturing these credits, either on the 941 or on the 7200. Social Security tax deferral election. This program allows for an employer to defer their full Social Security obligations from now until the end of the year. Deferred tax due date is extended to 50% by the end of 2021, and the other 50% due at the end of 2022. As I mentioned before, we've made an authorization sheet available for this election and are ready to support this deferral as needed. Please keep in mind, if you're in the process of a PPP loan and forgiveness for that PPP loan is granted, the tax deferral election must stop at that time, and it is your responsibility to notify your CSR so we can stop that deferral. So moving forward, as business is reopening and the shelter in place orders start to be lifted, we all need to create safe places for our employees and our clients. To help you, we have a special poster package available to help guide you in reopening your business. This includes several guides on preparing your workplaces as well as workplace hygiene posters from the CDC. We do anticipate doing a back to work webinar in the future, so keep an eye out for that invitation, please. In the meantime, we have a few downloadable guides available, one on payroll protection program, quick facts, as well as return to work tips. So Drew and I invite you to stay for the question and answer session. Please feel free to email us after the presentation with additional questions we may not cover during the Q&A. Also, please keep in mind we're happy to talk to your advisors if they need clarification around any of ConnectPay support relative to COVID-19 or anything covered in this webinar. Contact info for myself is on the screen, and this presentation will be sent out to all attendees as well. So at this point, we will open it up to the Q&A session. We had a number of questions flood in even before the webinar, so we have a few prepared in advance for you. And Drew, I will open it up to you.
All right, thank you, Matt. I was answering questions while Matt was speaking, so some of them that were typed in earlier have been answered. And here's one that came in before. And that question is, how many hours is considered a full-time employee? So this calculation of FTEs will be very important when it comes time to calculate the loan forgiveness. A full-time employee is an individual who works on average at least 30 hours per week. A full-time equivalent employee is determined by adding the hours of part-time employees on a monthly basis and dividing by 120. So for example, if you had 5 employees working 20 hours, then they would, a week, that would add up to 80 hours. So you would add all those 80 hours up and divide by 120 to get your FTE, your full-time equivalents. So the goal will be to keep your FTEs by the end of June consistent so that you can maximize your forgiveness. Next question, does overtime hours count toward the number, or can the employees only get 40 hours? You are eligible to pay people overtime. However, for the FTE calculation, only 40 hours count. Matt, why don't you take this one? Can I put family members on the payroll to increase my FTE count?
That's an interesting one. I would say yes, if family members were on the payroll last year, then they're part of that original calculation. There's been a lot of talk about adding family members that were not already on the payroll just to bulk it up. There's nothing saying that you can't do that at this point, but we don't believe it's going to pass an audit in the future. So there's certainly a gray area there. I would advise against that.
All right, thank you. And then another question about the emergency, the EIDL loan recipients. This client got $1,000 per employee up to $5,000. Is this a full grant like they are saying, repaid or not?
Everything that we've read to date indicates that this grant does not have to be repaid. So no repayment.
Okay. And then can you have new hires and it go towards the PPP loan?
Yes. No requirement around new hires, rehiring the same people, hire any new employees.
Great, thank you. Now, this next question for the PPP loans, many articles and advice are suggesting making a second bank account to show where the expenses are coming from and how the money is being used. this question they wrote, this seems like rework as payroll is payroll. Why, if a PPP loan is deposited into a business account and payroll is drawn from that account, you can just show these as PPP expenses. I don't see any difference with the funds commingled or not. Well, this is an important question, and it's going to go to documentation. We have seen some SBA lenders open separate accounts for their clients, and we have seen other SBA lenders simply put the PPP funds into their operating account. So we suggest that folks follow the guidance of their SBA lenders, because they will be the ones handling the forgiveness. Now, that being said, we also understand that there is some good bookkeeping standards that should be employed here. My recommendation would be to set up in QuickBooks. Most folks use QuickBooks. You could create in your chart of accounts an account and put the PPP funds in that from a bookkeeping perspective. That way, when you run payroll and you find out what your cash requirements are, you could then transfer that exact amount over to your operating account. You would do that in a timely manner that payroll ran, and then you would have your documentation. This was the payroll for that pay period. These are the funds that came away from what I was given in my PPP amount. Some folks might not be as adept in QuickBooks. They may choose to use Excel. Again, I would recommend that's a good choice. Excel is a good tool to document this. Now, with payroll, there are a couple parts of the gross payroll that won't be considered in the forgiveness calculation. Most important are FICA taxes. Both Social Security and Medicare for the employee and the employer are not part of the forgiveness, along with the fee that we charge to process payroll. So making sure you account for that is important. The other side of the PPP forgiveness is 75% to get forgiveness, 75% or more needs to go to payroll, but that other 25% is available for rent and utilities. And the law is pretty specific as it was written that these are expenses incurred and paid during the covered period. Now, that covered period begins the day that those funds become available to you and continues for 8 weeks. So it's a little bit tricky in that, if you get your internet bill for last month and you got funded 2 days ago, technically you cannot pay that bill because those were incurred in the previous month. But you've got that opportunity to take care of the invoices that come in during the covered period. So I would recommend using Microsoft Excel to calculate what your per diem is, and then that way you can allocate. Same way with rent, right? You may get paid on the 5th for your PPP money of May, and you owe May's rent. I would break the rent up in a per diem and then calculate the 5th through the 31st, come up with that amount. I would write the landlord a check in that exact amount. I'd send him a separate check for the first 4 days from my other operating account. That way it's very clear. And then when you put all this documentation together and go back to your SBA lender, it's extremely clear that those funds were used for that period. So this is going to be a big accounting job for everyone. And then I want to take folks back to, we didn't have a huge impact with the Affordable Care Act, but what we saw years later in the beginning of 2019, the IRS was sending out audit work for folks who were reporting ACA back in 2015 and 2016. So it's important that you keep records, and I would recommend keeping a separate COVID-19 response, because you will need this in July to work with your SBA lender to get forgiveness. But 2 or 3 years from today, there could be some instance where someone in the government wants to take a look at how this was handled, and you don't want to not be organized and have to go back and do all of the legwork. So it's really important that you keep really good documentation around everything that's following this PPP loan. All right, the next question came in: can you use covered funds expenses for sneeze guards, masks, gloves, signage, and cleaning supplies? Matt, why don't you take that?
Yeah, and this one falls in line with PPP fund usage. It'd be nice if you could use it for that, but the answer is no. We've not seen anything that would indicate that those expenses would be forgiven. That's it.
Okay. And then what is the difference between the two new pay codes, the C19 CK hourly and the C19 sick $sign limit is 510 per person? What ramifications, if any, are there for the employee or the employers on these codes? So this is part of FFCRA, and one is for hourly, the other is for salaried employees. So when you use these earning codes, the employee gets paid as normal. The difference is when you're deploying these codes because someone is out based on those requirements for the FFCRA, either sick or paid family leave. The way we set up the codes, those credits then don't take the tax funds and they leave them with the employer. So it's important that you use those. Your client service rep can help you make sure that you do that correctly if you're running payroll online by yourself. But the good news is that those funds will stay with you. Next question is about a self-employed person. Can myself, the owner, go on payroll and have it count towards the numbers? So this becomes a big question around your entity, right? So if you are a sole prop or a single member LLC and you have not received a W-2, then you used your Schedule C. So you take distributions typically, and then you pay estimated taxes. So when you went to apply for the PPP loan, you provided them with your Schedule C, and they looked at 8 weeks of your profit and made that your owner income. So you would continue to draw that way and you would not go on payroll, but those PPP funds can be allocated to you accordingly. So another reason to make these transactions very transparent in your accounting system. What the SBA has not done is detail exactly. You could have seasonality. Is it 8 of 52? Is that the amount? So we're still waiting for guidance, and we continue to get updates as everyone can check in with the SBA as the guidance becomes more clear. Matt, this next one, will the Paycheck Protection Program be forgiven if employees won't come back to work?
So I'm going to reference an article for this. This is very common question that we're getting right now. So employees who are furloughed or laid off must be put back on payroll no later than June 30th, 2020, as we covered earlier. In the order to avoid a reduction in PPP loan forgiveness, some employers, including those whose business is done primarily during the winter months, hire only seasonal workers and have no need to add people in June. In other cases, employees may be reluctant to come back to their jobs, either because they fear exposure to COVID-19 or because they're making more money collecting unemployment benefits, which currently includes an extra $600 weekly payment. So I'm sure that many of our listeners are experiencing the same thing. So the SBA and Treasury Department offered some guidance on this issue, saying that they may exempt laid off employees from the loan forgiveness reduction calculation if the business that receives the loan offers to hire offers to rehire the employees for the same salary and wages in the same number of hours, but the employees decline the offer. In addition, employees who refuse to return to work may forfeit their eligibility for unemployment compensation benefits. So, I mean, correct me if I'm wrong here, Drew. If I have the opportunity to rehire someone and they decline, it's in my best interest to document that rehiring process and keep it on file for later when it's rectified or audited by the Division of Unemployment. Correct?
Correct. Absolutely.
So, I mean, we're still waiting for more direction on this, but that's probably best practice at this point.
It is, and normally if someone is out on unemployment, the employer gets notified through the employment DUA that this person has requested it. But if someone goes in now to request it and claims that it's due to COVID, there's no correspondence going to the employer, and that's not being charged to their account. So employers, there's no way to connect those. So if someone does decide not to come back to work, you want to document that, because we don't know what the other side of that is going to look like, whether that makes them invalid to continue to get unemployment. It's not clear yet, but that's good guidance, Matt. All right, the next question: can you give your employees raises during the 8-week period and/or one-time payouts for hazard pay? Well, the legislation is not clear about one-time payouts, but you are able to give raises. So there's another one that came in, are guaranteed payments eligible for the PPP? And that is correct. So folks who work in an LLC that receive guaranteed payments are eligible for participation, but they would continue to get paid as they do, not through a W-2. So the big questions now come in about, how is the forgiveness, if there is going to be a decrease, how will that be calculated? And we're still waiting for guidance on that. The two components of it, if you have a reduction in FTEs, and then if the employees are paid have a reduction in their pay of more than 25%. Those will be the two determining factors. What we don't know is this haircut, will it be linear in some predefined order or circular? So folks are going to have to continue to pay attention to this, and I suggest they continue to talk to their SBA lender, as they will be the one that will be determining the forgiveness, and keep very good records. Those are the big parts right now. So this question came in, another one here, so I'll just read this out. Is for the ERC, that's the employee retention credits, I thought eligibility was full or partial shutdown or 50% reduction of gross receipts. You discussed gross receipts only, which is correct. Well, the language is full or partial shutdown or. So we tend to focus on gross receipts reduction, but the language is open to a full or partial reduction. So folks can take advantage of the employee retention credits, and they cannot use the credits though if they're using the PPP. Those are not to be used together.
Go down the list, Drew, to veterinary hospital next.
Yeah, you want to read that one?
Yeah, so this came in 11/14. Veterinarian cannot work due to pregnancy. Her physician has given her written notice that she should stay home. Where does she fit in the FFCRA sick leave or FMLA leave?
Well, yeah, I would jump in here and say for the first 2 weeks, you can take advantage of FFCRA. I would go to our HR Resource Center and schedule a discussion with an attorney. You can get that right on our website, and you'll be scheduled and can get in touch with someone in under 24 hours and lay out the full situation and get legal guidance to make sure that you're doing it correctly, and the attorney can spend the time to understand the ramifications of it.
Next, we have 1117. Will it help if I only use the funds for payroll expenses? I'm going to assume that this is around PPP forgiveness, and lay of the law indicates 75% on payroll expenses and 25% on mortgage debt and other outstanding obligations. So I would say the answer to that is no. You want to use the 75% spread.
Well, and this this dentist had emailed that they have an employee who had taken another position, and they expect lower volumes. So the question really is, can you use it exclusively for payroll to help you benefit? But there is no indication that that would be a benefit. But going below 75% would be detrimental to getting forgiveness. All right, here's another one. In the construction industry, weekly, partial shutdown as some jobs are still considered essential. Is hazard pay and/or bonus allowed and forgivable for PPP loans? So yes, because it's going to compensation. There are no guidelines really around hazard pay. We've seen some businesses, for example, grocery stores, add some pay to the frontline people, but there isn't any restriction against it. The interesting thing is that the look back period is, there were 13 weeks in the first quarter, and now the second quarter, part of that look back period, there's 8 weeks. So folks, really, if you literally read the CARES Act, we have to try to put 8 weeks into 9 3/4 weeks. So I would see that paying people the hazard pay or bonus would not work against you in this situation. Next question is, my wife quit her job on March 7th to join my business. Arg. Okay. So that's a difficult situation where someone was employed and then switched to join the family business. So they, I would not see a problem if they're an integral part of the day-to-day operations. Hiring, you're allowed to hire new people. You don't necessarily have to pay them. I would just make sure that I document their activity so that it's certainly legitimate, that you can prove that they were in fact, dutifully employed there. Bi-weekly payroll, 12 employees, insurance services, and benefit management company. Should we switch to weekly payroll? So we've seen this a lot. It's okay in most states. In Massachusetts, you need to notify employees to go from weekly to bi-weekly, but there's nothing in the statute that says you can't go from bi-weekly to weekly. We actually did it at Connect Pay to make it easy for us to track. You have to be careful and make sure that you manage your deductions, right? That all of your health deductions, et cetera, were set at a different frequency. But it does make it easy to run weekly payroll, report weekly payroll, and we're hopeful we get more guidance because, again, this rule for the PPP forgiveness states that the funds need to be the expenses need to be incurred and paid during this period of 8 weeks. Typically, payroll pays in arrears, and so we don't have good guidance on what we do in those last weeks in June. Do we need to run right up to Friday and pay them? So we're hoping for more guidance there. But I would not see a problem of switching to weekly, notifying the employees of your intent to do that, and also notifying of the intent to switch back once the PPP funds have been exhausted and we get back to some normalcy. Matt, do you want to take the next one or read one?
Yes, we have Nicole. If we laid someone off after 2/15 but didn't include them in the PPP application, do we have to hire them back before June 30th?
Well, I would jump in here and say, are you seasonal or not seasonal? Because if you laid someone off after 2/15, if your look back period was last year, you have up until June 30th to rebuild your head count. But you certainly don't have to hire anyone back. It's just going to reduce your the amount of forgiveness once those calculations are clarified.
Next question is on FTE count based, and we probably should touch on this again. There's two different ways to track full-time equivalents. You either have the ability to track it between February 15th, 2019 and June 20th, 2019, or the option of January 1st, 2020 and February 29th, 2020. Those are the two time periods you can use if you're outside of a seasonal business, correct?
Right, or last year, right? So if you're new this year, you would look at January and February of 2020 if you weren't in business last year. If you're seasonal, you would use that Feb 15, 2019 through June 30, 2019. And if you are a ongoing business that's not seasonal, your look back FTEs were last year's average. So the three different ways, depending on how long your business has been open and whether you're seasonal. And the rules didn't say that you had to pick one over the other. So it's what's most advantageous.
Yeah.
All right, the next one, I'm a doctor's office. I have 2 part-time receptionists, myself, and 1 medical assistant. However, prior to applying to PPP, I had to dismiss my medical assistant, not because of COVID, but due to the fact that she mislabeled another patient's blood work, which is a no-no to my practice. I'm planning to hire another MA. In the meantime, I had closed my office in April and will be reopening on May 18th with all the necessary precautions. Even though I only have 1 medical assistant, since my office hours are not full prior to COVID, my medical assistant only clocks in for about 40 hours per the 2 weeks. So this would just limit the amount of forgiveness. I think the important thing, especially with the PPP loan, is for everyone to consider that it's not just maximizing forgiveness. This is a 1% interest loan. So business owners should look at it under both lenses. One lens is this loan will allow me to have options and to be solvent and continue to run the business beyond June 30th. And then how can I get my business back up and running and get my people off unemployment and back to work. So it really has a dual purpose. And every business owner is going to need to make that personal decision about how much of it they go for forgiveness and how much they want to either return at the end of that period or keep at 1% to help manage the really unknown nature of what we're up against.
I have another interesting one here, Drew. If if we're partially open, this is a restaurant, if we're partially open for takeout only, can we pay our employees 40 hours still, their normal pay? And also, can we give a bonus for those coming in to work as hazard pay?
Yes, you can. You absolutely can. The question is, some of these components may get clarified in May and in June. And so the risk is it's unfair, or it's unfortunate that we sort of, everything was rushed to get the PPP money. And now we're waiting for SBA guidance to clarify it. But there's nothing saying you can't do it. The only negative would be that some of it, as a result of that, because they may look and say, well, you restored everyone to full pay, but you didn't have enough FTEs. So therefore, there's going to be a decrease in the amount of your forgiveness. That would be the only downside.
Next question. If my payroll ran on Monday and the PPP loan was funded on Tuesday, is it true I can't count Monday's payroll toward the PPP funds? I might miss the 8-week window on the back end.
Yeah, and that's what I spoke about earlier, right? Literally, it says in the CARES Act, expenses incurred and paid during the covered period, which is the 8 weeks. So that's why some of our clients have moved to weekly payroll, and we hope there's clarification, especially as we get to the end of the 8 weeks, as to when those funds need to be paid, so that folks maximize their forgiveness. But that's a good question, and one that we hope we get guidance on quickly so we can share with everyone. Right, here's another one. We are a manufacturer and we pay profit sharing after we file in March. Can that be used as payroll in the SBA loan? Everything that I've read says yes. There's nothing that I would definitely sit with my CPA and my SBA lender, because I don't know the magnitude of that typical profit sharing, and make sure you may want to hold off and wait till we get guidance. It could be any day now that could clarify that. But you could certainly pay it. The question is, how negative will that be to your forgiveness?
Next question, construction company. We are in the construction field and have been operating at about 50% capacity. So employees have been working less hours, and we have been making up their salaries with additional hours to comply with the maximum of 75% of salaries under the PPP. We've been using the vacation code to track the additional hours we are paying our employees. Is it okay to continue to use the vacation code? Will using the vacation code affect forgiveness? Well, if it's an FFCRA code, it will affect forgiveness because there's no overlap. You can't use those codes for PPP forgiveness.
Right, but vacation is not in the FFCRA. So to clarify, if they've just been coding those extra hours under vacation, vacation is an allowable expense under PPP.
Yeah, so
but it's not to be confused with the paid family medical or the sick leave, which were the emergency components under FMLA as part of FFCRA. These are distinct and different. Next question is FTE calculated based on the 2/15 payroll run or the day you received your funds? Actually, the look back period is one of those three. It could be all of last year, the average. If you're a new business, it would be January and February. And if you are a seasonal business, it would be the look back period of Feb 15, 2019 through June 30th, 2019. So those are the three options. And then the next question, a dentist, 11 employees, all furloughed, just got PPP funds yesterday. Office is still closed. If all employees are rehired by 6:30, but I don't need them fully hired right away, is my forgiveness decreased because I have not spent the funds on payroll during the full 8 weeks? Yes, there is going to be some decrease in the forgiveness, but the good news is at the end of the forgiveness period, if you don't need the funds, you can simply, there's no prepayment penalty on the PPP loan. So you can simply give the funds back, a 1% interest for such a short amount of time against the reduced forgiveness. It's still a great deal. And it would give you, the business owner, the option to keep it at 1% for up to 2 years. So having options is always good. All right, we've got about 5 more minutes. So the next question is, how much does your revenue need to be impacted to be eligible for a PPP loan? There is no threshold with the SBA for the PPP loan. There has been some abuse that some publicly traded companies were able to get those funds. And there's also kind of an uproar with some of the big banks, and one in particular that basically just serviced their largest clients with the maximum loans and ignored all their small businesses, which really doesn't fit with the spirit and of intent. Last week, the SBA closed the window except for small loans from 4 p.m. to midnight to help smaller banks get more access. So in the second round, there were probably 1 million more loans issued and smaller in nature, but there is no threshold for impact. It's the exclusion was that you had no other source for funding. So obviously a publicly traded company can sell stock and therefore raise funds. And I believe Delta Airlines did exactly that. So if you've exhausted all other methods of getting funds, you don't need a threshold of impact to apply for it. Restaurant, biweekly payroll, all employees work under 30 hours a week. Can you please explain again how FTEs work? Another question, how do we handle employees? We offer their job backs, but they say they make more on unemployment. They don't want to come back. So we kind of touched on this. So the FTEs are, add up the employees' hours per month. So you have all your employees and their typical monthly hours, divide by 120. That's your FTE calculation. So again, all the hours for a month divided by 120. And then if folks don't want to come back, I would send them a letter, put it in writing, let them know you're offering their position back, and let them respond and file it. And then continue to run your business. And if you need to hire, go ahead and hire new folks. Next one, small partnership with 2 partners slowing down this year, even before COVID. Concerned about 75% of wage requirement for PPP. What is the term of that, number of months? So the PPP loans go for 2 years, and the interest rate is 1%. There is no principal payments for the first 6 months, so nothing is due for 6 months. Are 8 weeks of payroll the dates of hours earned, or the date payroll is direct deposited to employees? So again, specifically, the CARES Act says expenses incurred and paid during the covered period. So literally, unless they give us latitude, and we hope at the end we have the ability to run the pay period and then make payroll the following week as we normally do. But right now it is literal. Expenses incurred and paid during that period. Can you put together a sample Excel doc on how to break the PPP so that you can use your Excel example? Yes, my email is Drew, D-R-E-W, @connectpayusa.com. Send me an email and I will work on an Excel to help you break down those expenses. We process first payroll on the day we receive the PPP loan from our regular checking account. So can we include this for our loan forgiveness process? The question is, were those expenses incurred? Was that payroll incurred, the liability? Because if it would just happen to be a payday, the day the funds, then the funds begin the 8-week period. So then it would only be the labor that occurred that day and moving forward. Here's an extension of that. Therefore, if we got our money the 1st of May, we cannot go back and take money out of that account for payroll in April. No. And that's from a construction firm. Can owners increase their pay under PPP and get forgiveness? Income is restricted up to $100,000 on an annualized basis. However, you can include employer's match on 401k and the cost of the health insurance. So, but you can't go beyond that and have that part of the forgiveness. And we're coming down to the last 2 questions. Does everyone in your Connect Pay staff know which ones in the payroll actually is covered by PPP? Did I hear that correctly? FICA is not covered in the PPP. So we work diligently to train everyone. It's been a lot of information, and we've done what we consider a very good job getting this information out. But I cannot say that every person in the company can answer every one of these questions. We continue to work at it. With respect to FICA, yes, FICA, this is Social Security and Medicare, it's 6.2 social, 1.45 Medicare, half is paid by the employee, and then the same amount is matched by the employer. Those are not included in the forgiveness calculation. And the last question, if we do have a PPP loan, do we use the new COVID codes in Connect Pay or just the normal codes? You don't want to commingle. The COVID codes are earning codes for people out on FFCRA, sick, or medical leave. The PPP loan is funded by your SBA lender and should be used 75% or more for payroll and the balance on rent and utilities to maximize your forgiveness during that 8-week period. So I want to thank everybody for participating today. We will have this recorded. I know some people tried to get on and couldn't, and we're also going to be rerunning this next week as we learn more. We're getting updates constantly. So on Thursday, May 14th at 11 a.m., we will have another webinar. We'll review this and continue. So thanks, everybody. I hope this was helpful. And if you need to get in touch, M. Venuto for Matt, M. Venuto at Connect Pay USA, and Drew, D-R-E-W, at connectpayusa.com. That's our email addresses. And thanks again, and have a terrific day.
Thank you all.